sectors like legal, accounting, computer-related services, which continue to do well for the last couple of years, in spite of an overall slowdown.
All right. Well, actually, let me get quickly comments from Sonal and Sajid as well on this capital formation number coming as a further contraction, but private final consumption expenditure rising by 8% in the fourth quarter. Sajid?
Well, I think the capital formation number, Lata, is no surprise at all. Nobody should be surprised by that. What's a very positive surprise is private consumption. But I'd be a little bit skeptical of the expenditure side data on a quarterly basis. We've seen massive revisions in the past. If in fact this is true, it will be very surprising to me, because you don't see the high frequency data reflect that. Yes, some of the production of consumer non-durables has picked up in the last couple of months, but it would not suggest an 8% rate of growth. If in fact this is true, perhaps where this is coming from is the rural economy. We don't have high frequency rural wage data the last few months, but perhaps rural wages have picked up, and that's what's driving stronger consumption growth based on two strong harvests. The only point I would make there is that if in fact that's the case, it would also mean in time to come pricing power will pick up, and expectations that inflation is coming off, are not consistent.
Oh, Sajid, now this is being a little mean. I mean, heads the government lose, heads the economy loses, tails also the economy loses. It's a little bit of consumption pick up. No, I'll come to you in a minute, obviously. Yeah, go ahead, okay.
No, I'm simply saying it's very good news. It's very good news if in fact private consumption has picked up at the 8% rate. It's most likely driven by rural dynamics. I'm just saying that the macro framework we have should be consistent, that if there is a pickup in private consumption, then you cannot also simultaneously expect pricing power to remain as muted as it's been. That's all. It's clearly very good news if in fact this is true.
I agree. Sonal, with the usual caveats that Sajid has pointed out, and I'm sure you're also going to say the expenditure side of the GDP is much less reliable than the output side. But that said, do you have anything positive to say about consumption growing by 8% in the fourth quarter, but capital formation contracting by 1%? And just one more data for all of you gentlemen and all viewers, very important. The per capita income for last year was 39,904 in constant terms, obviously. That's a 2.7% growth over the 2013 level. So per capita income, pathetic growth of 2.7%. Okay, Sonal, your thoughts?
Lata, I mean, the investment side is not surprising. I'm a bit surprised by this 8% growth in consumption and 11% growth in exports, because, Jan-March quarter actually nominal export growth was very weak. In fact, it had slowed down, and therefore what this is suggesting is that actually volume growth was strong, when we know that US GDP also contracted this quarter. So world demand actually was not as strong this quarter. My suspicion is that we are overestimating both the PFC as well as the export numbers a bit. But overall consumption is probably still growing around 3 to 4%, which is slightly on the sluggish side. The real problem continues to be on the investment side. But my overall takeaway really is that domestic demand remained very, very weak in the Jan-March quarter. And I think the only positive thing that comes out here is that the rural side of the economy, and to an extent the export side of the economy, is essentially helping us sort of continue to float around 4.5% growth.
Okay. Soumya, gross fixed capital formation has declined by 1% for 2 quarters consecutively now. In your sense, when do you expect it to start translating into a pickup once maybe there is some amount of investment pickup in the economy with the new government rolling out initiatives, etc.?
See, in our sense, I don't think a pickup in investment is we are not looking at any pickup in investment, at least in the first 6 months. Maybe there could be a marginal pickup in investment beyond July once the budget is presented. But before that, I don't see any material pickup in the investment. But one good news which I just want to add over here, I mean, after the elections, a stable government has been formed. There is a decline in inflationary expectations, and if mandi prices are an indication, it indicates that prices have actually softened. So if that holds on, that could be good news for the central bank as well as the government.
Okay. Well, just a word to explain the discrepancies, Sajid, Sonal, Soumya. If you go by the expenditure side, actually GDP has grown by 5% year on year. It is 61.9 lakh crore in constant terms. But if you looked at it from the output side, GDP at factor cost, the rise is, as we know, 4.7%. So clearly there is an estimation issue over here, and I will leave you all to those details later on. But just one quick question to all of you. The same thing that I asked, is the fourth quarter the lowest? Will the first quarter of the current year or the first half look marginally better than the fourth quarter of FY14? Sajid?
We do expect, Lata, that for the first quarter of this fiscal year, which is the April to June quarter, that on a sequential basis, because from the year-on-year numbers from what you read out, on a sequential basis, this is a pretty big slowdown Jan to March compared to the previous quarter. We think from April onwards things pick up for a couple of reasons. One is that a lot of what the slowdown in the first quarter was because of the fiscal drag, very tight fiscal policy. Government spending has picked up in this particular quarter, and that will help GDP growth. And also the hope is that the outlook for exports will pick up a little bit going forward. As Sonal said, the first quarter was a terrible quarter for the US economy, and things will begin to reverse. Finally, one last point, if in fact these consumption numbers are even close to being true, perhaps what's happening is the fact that food inflation has come down is opening up some purchasing power. And if inflation continues to soften, then that purchasing power could give you a little bit of consumption growth. So for all those reasons, the hope is there'll be some lift in the current quarter, but don't expect the lift to be large. Until the capex cycle begins to turn, you'll see a modest cyclical pickup, nothing more.
All right. Similar question to you, Sonal.
Broadly agree. I think what our leading indicators are suggesting is that in the next 2 quarters, non-agriculture GDP growth is going to remain around current levels. So the picture that leading indicators are pointing to is essentially next 6 months being a period of growth consolidation. So for the second half of 2014, therefore calendar year, we don't see a big pickup, maybe growth remaining in this 4.5% to 5% range. But I think, incrementally things are looking better, and 2 things, worth highlighting. First is the outlook for global growth. Beyond the contraction we've seen in US in the first quarter, our expectation is that there will be a pickup, and broadly we're expecting global growth to be better in 2014 and 15 as compared to 2013. And second, with the change in the election, that has been a big game changer for the economy. We've only just started seeing, asset prices rising, and therefore I think, the effect of that on the real economy clearly will come with a lag. But our expectation is that early 2015 and mostly in fiscal 16, we will start to see a gradual pickup in the investment side as well. So bottom line being, don't look for a big pickup next 6 months, but I don't think that's a cause for concern. I think the building blocks are basically in place now for pickup in India's growth cycle from 2015 onwards.